Hello everyone, welcome back to this week's Technical Insights. Last Friday, US equity indices managed to stage a recovery from a volatile week after a losing month in February. Major US indices rallied sharply into the Friday's closing. Part of that could be related to index rebalancing and other technical buying sources. There was a heavy imbalance to the buy side of the market on close order on the New York Stock Exchange. The Dow Jones Index rose 601 points or 1.39% to close at 43,840 points. All sectors gained, led by the financial sectors. The broad index S&P 500 added 92 points or 1.59% to finish at 5,954 points. Tech-heavy Nasdaq Composite also climbed 302 points or 1.63% to close at 18,847 points. In economic news, the US Fed preferred inflation measure, the PCE index, declined 0.2% in January, in line with estimates from Bloomberg that was expecting a slowdown in spending growth to 0.2% as well. The core PCE index, which excludes food and energy, decelerated to 2.6% in January from the 2.9% the month before. And sequentially, the core measure accelerated by 0.3% gain. Both figures were much in line with analyst expectations. For the full trading week, the 30 stocks down managed to outperform, rising about 0.95%, but that can't be said for the other two major US indices. The S&P 500 declined 0.98% for the week, and the Nasdaq Composite Index actually tanked 3.47% for the period. And earlier last Friday, Ukraine President Zelensky left the White House after a heated on-camera argument between him and US President Donald Trump. The US wants access to Ukraine rare earth minerals as part of a broader effort to end the conflict between Kyiv and Russia. Trump says to Zelensky that you either make a deal or we are out, and you are gambling with World War III. He then posted on Truth Social that Zelensky is not ready for peace if America is involved, and he can come back when he is ready for peace, which Donald Trump promised a quick end to the Russia and Ukraine war during his campaign. The market initially sold off over here, as you can see, because it was a heated and contentious conversation which was caught on TV, which is not usually a good thing to happen between two leaders of the world. Month to date, the Nasdaq Composite Index led the way down, sliding nearly 4% in February, due largely to the 3.47% drop that we see this week. This was the worst month since April 2024. Broad index S&P 500 declined 1.4% for the month, and the Dow lost 1.6% in February. In Asia, things are not looking rosy either. You can see over here, Hong Kong stocks fell over 3% on Friday to close the week in the red after the US doubled the tariff on Chinese import. The Hang Seng Index actually slumped 3.28% or 776 points to end at 22,941 points, while the Hang Seng Tech Index actually plunged 5.32% or 312 points to close at 5,568 points. Investor sentiment soured after US President Donald Trump said he will impose an extra 10% tax on goods imported from China effective this week, as Bloomberg News reported, along with an initial 10% duty on Chinese goods imposed earlier in the month. These added levies are further pushing the world's two largest economy closer to a trade war again. In response, Beijing said that if US insists on proceeding with this course of action, China will take all necessary countermeasures to safeguard its legitimate rights and interests. Hong Kong tech stocks, which also took a hit last Thursday after Nvidia underwhelming earnings and a soft outlook, descended for a second straight day on Friday. Meituan and Alibaba dropped 6%, while Tencent, Xiaomi retreated 3 and 2% respectively. Back to our Singapore market, our benchmark index closed lower on Friday as well, following declines in the region. The STI ranged from 3,889 points to 3,912 points throughout the day on Friday, and ended the session at 3,895 points, down about 25 points or 0.65%. For the trading week, we are down about 34 points or 0.87% after making a new all-time high on Monday over here at 3,951 points, now bringing the year-to-date returns only to 2.78%. The IHS REIT index also fell 0.55% last Friday after the 10-year US Treasury yield ended the week 50 bps lower than the previous week at 4.2%. Our three local banks averaged a 1.6% decline last week, with UOB seeing the least decline of the three local banks, in addition to the least net institutional outflow over the week. OCBC also reported its result last week, attributed net profits to equity holders rose to dollars 3.66 billion during the second half of 2024 from 3.43 billion a year earlier. Earnings per share grew to Singapore dollars 80 compared to the 76 cents in the previous period. And net interest income, however, declined to dollars 4.89 billion from 4.92 billion a year earlier, mainly due to the tightening of loan yields. The trio of local banks completed their reporting for their FY24 results and are set to distribute about 13.7 billion Sing dollars in dividends for FY24, booking again another record in combined quarterly net interest income at dollars 8.63 billion. The combined non-interest income declined from 4.9 billion in third quarter 2024 to 3.7 billion in fourth quarter 2024. This was the ninth consecutive quarter combined net interest income for the three local banks that came in above the 8 billion mark, with the pickup in loan growth offsetting the impact of the 3-month compounded SORA declining from 3.49% at the end of the quarter 24 to 3.07% at the fourth quarter of 24. So for this week's technical analysis, let's look at OCBC Bank. Last Friday, OCBC Bank share price closed lower by 16 cents or 0.92% to finish at $17.21. For the trading week, OCBC share price lost about 52 cents or 2.93% for the first losing week in 3. From the chart, we noted that OCBC share price has been on a strong uptrend since the beginning of 2024, benefiting from the elevated interest rate and enhancing their net interest margin. OCBC recent high was seen on 19th of February at $17.93 and the 9th of January at $17.59 over here. Looking at possible support level, the previous high on the 16th of December over here at the $17 mark could have a change in polarity to become a support level, which is finding confluence now with the lower bound of the Bollinger Band at $17.02 as well. The next support level could then be the low that we saw on 23rd December over here at the $16.35 level, which is closer to the 100 days moving average in amber that you see here at $16.49. With OCBC share price near its all-time high now at $17.93, the next resistance level could be the upper bound of the Bollinger Band at the $17.85 level. And above this level, we could see the psychological level of the $18 handle. Looking at the MACD indicator, the MACD is showing a negative reading with accelerating downward momentum in the last 3 trading sessions. The latest RSI reading is at 45 points, is also 5 points below the 50-point neutral mark, indicating weak momentum in OCBC share price right now. With both the MACD and the RSI indicator signaling that OCBC is currently experiencing a weak and downtrend momentum, the previous high on the 16th of December, finding confluence with the low bound of the Bollinger Band, which is the white line that you see here, could be the first support level at $17 handle. Based on the 18 analysts covering OCBC in the past 3 months, 7 had a strong buy call, 3 have a buy call, and 7 have a hold call. There's also a 1 strong sell recommendation with the 12-month average target price at $18.27, with the maximum estimate at $21.10 and a minimum estimate around the $15.70. And this brings me to the end of this week's updates. If you find this information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.